Hey, it's Sasha Evdokov, and welcome to TRADERSFLY.com, where I share with you some insight about investing, trading, and the stock market. Now, in this week's video, what I'd like to do is share with you some insight about round lots and odd lots when it comes to trading your group or group of shares. So when I'm talking about a lot, I'm really referring to a group or the amount of shares that you're trading, not in terms of trading a huge bunch of lots of quantity. So I'm talking about the group of shares. So in this video, what I'd like to do is really dissect a round lot and an odd lot and the appropriate way that you should be trading. So first off, what is an odd lot and a round lot? Well, if we go back in time and we go to, let's say, grade school, if you remember the number 20, that usually breaks down into a nice even number. It breaks down very healthy in a lot of different forms and factors. So it'll break down into a 5 and a 4. You can also pull a 10 and a 2 from there. So you have numbers that you can pull from the 20. It's a nice number to work with, and it also has a 0 at the end. So if you multiply it, it just makes things a lot easier. Now, if you look at the number 17, which is very close to 20, but breaking the number 17 down is a lot more difficult. It's problematic. Now, in the stock market, we have the same kind of concept. We have the round lot, which it would be your number 20, for example, or we have a problematic number or an odd lot, which could be like 17 shares. So if you're trading in lots of 100, that is typically the traditional lot size. So if you're trading in 100 shares, 100 shares, 200 shares, 500 shares, 1,000 shares, 1,500 shares, 10,000 shares, if you're trading in nice even numbers, it's typically the better approach for your share quantity. And that is because of a few different reasons. The first reason is really comes down to it's just easier to calculate your profits, losses, and just easier to work with the numbers because you have a lot of zeros at the end and you're just doing some basic multiplication within your own mind to get to your desired result. So if you have 100 shares and a stock goes up $1.22, you can do the calculations and know your profit very quickly. Now on the flip side, if you have 97 shares and you're trying to calculate if a stock goes up $1.35, to figure out that exact precise number makes it much more difficult. You may even need to get out a calculator because you're trying to get precise numbers. It's really more difficult to calculate. So that's kind of the first advantage to trading a round lot versus trading an odd lot numbers, that you're able to calculate things very quickly. Now, if that didn't really interest you or you weren't really a fan of that, then one of the next advantages is really that so many other people are trading in round lots. They're trading in those kinds of numbers. And if you're all trading in those kinds of numbers, it's a lot easier to get in and out of trades. So for example, people are executing trades at 100 shares, 200 shares, 500 shares, 1,000 shares. And because they're doing that, that means if you want to buy 100 shares, it's a lot easier to get in and out of that stock. Now, you can trade odd lots. You can trade in not 100 batches. So for example, not 100 shares. If you want to trade something along the lines of 50 shares, you can go ahead and do that. There's absolutely nothing wrong with that. However, sometimes it's a little more difficult to get filled. And the reason for that is because other people may not be trading it in that form. So the more weird or the more odd lot that you get, the more difficult it may be to get in or out of that stock. So if you ever tried to trade, let's say 17 shares or 133 shares, your order may actually get filled not in just one nice solid fill order, but it may get filled in multiple orders and in a split order fashion. Now, you typically won't be charged multiple commissions for this, but sometimes you will get some price slippage or different prices on your fills when it comes to these kinds of things, because it just depends how you execute the order and it depends on your broker. So that's something to check up on. To get a good insight of the type of quantities and the lot sizes that people are trading in a certain stock, what you could do is open up the time and sales and just see how those orders are being executed and how many shares are being executed at any given time. So if you take a look at this screen right here, you can see that the time and sales, how people are executing their orders, you can see in the different lot sizes. Now you'll notice many of them are round lots, and then some of them you also have some odd lot numbers, which sometimes work out fine and without a problem, but the majority of them are nice rounded numbers. All right, so if you already understand, okay, I probably should be trading in nice round lots, what happens if you can't trade in a round lot? For example, an expensive stock of, let's say, $250, and maybe you can only buy 12 or 13 shares. Well, in this case or situation, what you want to do is get to the next closest nice and healthy number. So for example, typically 100 is the ideal situation in terms of trading your shares that you want to get to. So if you can get to 100 shares, that would be great. But if you can't get there and you can only trade 10 or 20 shares, that's still a lot better than trading 12 or 21 shares. So what you want to do then is find a pattern or a way to break those shares down into multiples of 10 or multiples of 5 or multiples of 25 or 50. If you can do something like 5, 10, 25, 20, 50, 75, 100, all these different kinds of quantities that break down nice and even, it'll be a lot better for you rather than trying to trade something like 31 shares or 72 shares. So try and find a nice, healthy, even round lot number. That way you can get in and out of that stock a lot easier. Now I do want to add in one additional bonus insight to this video, and that is, if you know about options, one option contract refers to 100 shares of stock, or at least the control of 100 shares of stock or equity. So if you're looking to have 100 shares and you're looking to protect it with a put or purchasing a put, then what you can do is purchase one put, and that will help offset your 100 shares of stock. So if you have 200 shares of stock or 300 shares of stock, what you could do is buy or purchase 2 or 3 puts, and that will control your 200 or 300 shares of stock. So you can see how this works one and one together within options and why people trade in lots of 100. Because once you start adding and mixing in options within your trades, it starts to become very easy to manipulate or make changes to your account and change it dynamically as you start moving forward within your trading account and making adjustments to your trades, investments, and so forth. So that's just a little tidbit and a little bonus for you if you're trading options or looking to trade options in the future. All right, so thanks for hanging out and sticking with me in this week's video lesson. If you want to see some more in-depth lessons, like my stock market recaps that come out every single week, then go ahead, click this link, and when you get there, enter your name and email address, and I'll send you an email every time a new recap is released. And they're typically about 20 to 35 minutes long, where we go really in depth on the current stocks and on the market. Now, on the other hand, if you want to hang out on YouTube and you don't want the in-depth stock market lessons or the stock market picks, then just click one of the thumbnails right below this video and we'll continue learning together. Thanks again, and remember, there's more to life than money or financial gain. Go out, do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.